Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 16th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice the ES is already up 2.8% heading into Tuesday's RTH Open. Keep in mind today we do have Fed Chair Powell testifying at 9 a.m. Central, and also again tomorrow, but with an 11 a.m. Central start. So Fed Chair Powell will testify the next 2 days and will also speak on Friday. Markets rallying right now after a pretty solid pullback, and overall, one thing we've mentioned before is that whenever the market sees an initial reaction away from the FOMC key level, down in this case, you will likely see a bounce back to that zone after you see a strong reaction or strong rejection at a key zone. We saw that yesterday. We got a nice continuation to the upside here already in overnight trading, and the idea is we likely come up here to test somewhere between 3190 and 3200. Overall, the market could still reject that zone and develop a lower high that leads to weakness ahead. But at the moment, very, very bullish and approaching the 3196 FOMC key level. If there's any failure to stay above 3150, for example, that would suggest rejection down the road. Okay, let's take a look here at the NQ. What you'll notice with the NQ, very similar price action, a very strong bounce back already, and already very close to reaching that 10,054 level. That's a very clear target from where we currently are, about 65 handles or so. Again, a very strong lower low failure in the previous session. It's exactly what we were looking for. We mentioned that there was the potential to see a rejection, a bear trap below the previous week's low, with a shot to bounce back toward the weekly pivot range. And then from there, again, we've seen the strength continue onward, and now the FOMC key level above is the next target. All right, let's take a look here at the ES, no, rather the crude oil chart here. For crude oil, what you'll notice is a similar bounce that we've seen out of these. The previous session started with a failed low. We've seen the bounce back up, and price closed right at or just beyond the prior session high. So very strong rejection day there as well. We mentioned before that 3750 to 38 is a very important level, that if price can't stay above that zone, we could see signs of rejection. Right now, until proven otherwise, this market's being defended and bought in the PIMA trigger zone. And as we mentioned yesterday, we're either going to see a move that takes us down toward a prior breakout zone, 27s, or we're going to see this thing rally. And it depends on the previous month's key range. So again, overall, we still have more upside price action that could take us to 42 and perhaps into that 45.65 200-day moving average. Okay, let's take a look now at gold futures. You'll notice here with gold that this one continues to be range bound, continues to trade within this D-shaped profile. Very clear box right here. The 1670, 1680 zone of support has been very, very strong. Has not been able to get through that area. But likewise, anything above 1760 has been offered so far, and this last rotation didn't even get there. Now we have kind of a coiled up compressed range here that's still building out up at this area. So 1725, 1730 continues to be kind of that key zone as price just trades right around it. So until price gets to an edge, very difficult to do much with gold here. At some point we will push to an edge, but fading the edges is the best approach right now as we look to engage this one. But for the most part, this one remains a market to kind of stand off, stand aside. It is building energy for that next major move, and when it does get that move, it could trigger a pretty significant 200+ point move in the direction of that breakout. So eventually it will happen, but right now, waiting until something occurs. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.